World Liberty Financial USD1 United States dollar represents a paradigm shift in the stablecoin landscape. It is not merely a technological instrument for dollar-pegged transactions, but a sophisticated financial political vehicle. Its value proposition lies not in outperforming the dollar, but in leveraging a unique confluence of institutional trust networks, geopolitical branding, and strategic capital allocation to carve a dominant niche in high-value, institutionally focused transactions. This analysis deconstructs one United States dollar as an asset class, evaluating its underpinnings, growth drivers, key inherent risks, and long-term viability in the global digital asset ecosystem. Deconstructing the foundation. Beyond the one-to-one peg, any analysis of a stablecoin must begin with its claim to stability. USD1 asserts a one-to-one peg to the US dollar, backed by real-world assets, predominantly US Treasury Bills. With custody managed by BitGo, a regulated, reputable custodian. Technical assessment. From a pure credit risk perspective, this structure is sound and mirrors the blueprints of established players like USDC. The use of short-term treasuries provides high liquidity and minimal price volatility for the backing assets. The involvement of BitGo mitigates but does not eliminate counterparty custody risk. This is table stakes. It provides the necessary credibility, but is not a differentiator. Strategic intent. The choice of this conservative, transparent backing model is a deliberate signal. It is designed to appease institutional risk and compliance officers. The gatekeepers who are inherently skeptical of algorithmic or opaque models. It says, we are playing by the traditional rules of the game. This lowers the initial barrier to entry for the target clientele, large scale. Politically aware capital. 2. The core differentiator, the political capital imprimatur here, lies the axis upon which the entire one United States dollar proposition rotates. The association with former President Donald J. Trump and his family is not a marketing gimmick. It is a form of strategic political capital being monetized within the digital asset space. Brand as a trust proxy in finance, trust is the ultimate currency. For a specific substantial segment of the global wealthy, institutional, and political classes, the Trump brand carries immense weight. It represents a specific set of policy expectations, deregulation, America First economic policies, and a powerful network. USD1 transforms this brand equity into a digital financial instrument. For entities aligned with or seeking access to this network, holding and transacting in one United States dollar becomes a signal beyond finance. It is an alignment of interests. Access to exclusive flow. This is the critical revenue hypothesis. Traditional stablecoins, USDT, USDC, are utilities. They seek ubiquity. One United States dollar appears to be targeting exclusivity. The reported $2 billion transaction between Binance and Abu Dhabi SMGX using one United States dollar is a case study. This was not a retail payment. It was a massive interinstitutional capital movement. The use of one United States dollar here suggests it served as a preferred settlement rail, potentially facilitating a deal that benefited from the unique political and relationship capital of the WLFI backers. This is the moat. The ability to attract and enable block-sized transactions that are as much about relationship building as they are about asset transfer. Market segmentation. One United States dollar is executing a classic market segmentation strategy. It is seeding the vast low-margin retail and general DeFi market to USDT and USDC instead. It is targeting the high-margin, low-volume apex of the market, sovereign wealth fund transactions, large-scale private equity settlements, political capital flows, and other exclusive institutional actions. Its multi-chain deployment Ethereum. BNB Chain is not for user convenience but for institutional flexibility, allowing partners to settle on their chain of choice. 3. The ecosystem and LOFI token. Governance is an option. The creation of the WLFI governance token, alongside USD1 reveals a longer-term strategic layering, separation of function. This is astute. USD1 is designed to be a clean, regulation-friendly stablecoin. WLFI absorbs the volatility and speculation. It acts as the equity kicker that bet on the growth of the World Liberty Financial ecosystem itself. Holding WLFI is a bet on the network's ability to secure more exclusive deals. form more partnerships, and increase the utility and demand for one United States dollar. Evaluating BLDONE. The support for projects like BLDONE to build DeFi utilities for one United States dollar on BNB Chain is a hedge. It creates optionality. While the primary focus is institutional OTC flows, developing a DeFi yield ecosystem around one United States dollar provides a baseline utility floor. It ensures the token has liquidity in use cases outside of purely political institutional channels, mitigating keyman or network concentration risk. 4. Financial metrics and market positioning. A snapshot analysis as of Q2 2025, with a market capitalization approaching $2.7 billion. One United States dollar has achieved a remarkable launch velocity. Growth driver attribution. 90% of this growth can be attributed to the catalytic $2 billion Binance EMGX transaction. This was not organic retail-driven adoption. It was a big bang injection of credibility and volume. It immediately propelled one United States dollar into the top tier of stablecoins by market cap, creating a powerful perception of inevitability and scale. Concentration risk. The majority of the initial supply on BNB Chain, coupled with its use in a single massive transaction, indicates highly concentrated ownership and usage. It's a double-edged sword. It demonstrates powerful distribution capabilities, but also poses a liquidity risk if a large holder exits. The true test will be the diversification of its transaction volume over the next 12 to 18 months. Risk assessment. The flip side of the coin, an expert evaluation must rigorously stress test the proposition. Political single point of failure risk. One's United States dollar's greatest strength is its greatest vulnerability. Its brand equity is inextricably linked to the political fortunes and legal standing of one individual in his circle. Any significant political or legal setback for the key figures could trigger a crisis of confidence in the stablecoin, regardless of its one-to-one backing. Trust in the network could evaporate faster than trust in the collateral. Regulatory scrutiny. This asset will be under a microscope. Its explicit political connections make it a potential target for regulators across the political spectrum. The SEC, CFTC, and Treasury's FinCEN will examine it not just for monetary compliance, but for potential campaign finance, sanction evasion, or influence peddling implications. Its institutional focus makes it more visible, not less. Market niche saturation. The market for multi-billion-dollar politically inflected transactions is not infinite. How many $2 billion deals can WLFI facilitate per year? Growth may become lumpy and dependent on discrete headline events rather than steady organic adoption. Competitive response. Incumbents USDC Circle, Paxos, and other politically connected entities will not cede this space. They may develop competing white-glove services for institutional clients, leveraging their own established regulatory relationships. Conclusion and investment framework world. Liberty Financial USD1 United States dollar is a fascinating high-stakes financial innovation. It is less a currency and more a specialized financial network tokenized as a For the institutional investor, one United States dollar presents a compelling tool for specific situations. It is a viable settlement option for entities already within or seeking to engage with its core political network. Its asset backing meets basic due diligence requirements. However, it should be viewed as a strategic portfolio tool with clear counterparty political risk, not a passive dollar equivalent holding. For the market analyst, one United States dollar validates that the stablecoin market is maturing beyond a monolithic digital dollar concept into specialized instruments serving niche needs, be they algorithmic, for DeFi, regulatory for banks, or, as here, political-network-based for institutional capital. Final valuation outlook. The fundamental value of one United States dollar will always be $1.00. Its success metric is not price appreciation, but transaction volume share within its target niche. Its growth trajectory will be stair-stepped, driven by discrete headline partnerships. The WLFI token, as the ecosystem equity, will be the volatile proxy for betting on the network's expansion. In summary, one United States dollar is a bold experiment in converting intangible political and relationship capital into a tangible, liquid, and tradable digital asset. It has cleared the first formidable hurdle, proving it can facilitate monumental transactions. Its long-term survival now depends on diversifying its utility. navigating the treacherous waters of global regulation, and ultimately proving that its unique model can sustain more than one spectacular deal. It is a case study in the convergence of high finance and high-stakes politics in the digital age, and it demands to be watched not just by crypto analysts, but by anyone observing the future of capital and influence.